And here we are. It is the Working Title Show with Zach Sams. We are back, and I am excited to be here. The weather is finally starting to cool down, but the real estate market and the economy in Dallas is not cooling down. It is still red hot, and you couldn't be a better place in the world than right here in Dallas-Fort Worth Metroplex. And so I'm excited about the show today. We have a great guest, and he is back by popular demand. Rush Graves, the managing principal at AMR Capital, has come back on the show, and I couldn't be more excited to have you here, Rush.
Thanks for having me, buddy. Good to be here.
Absolutely, absolutely. So, Rush, before we get into it all, the real estate market, we're here in the third quarter, 2019, and despite all the things you've heard out there, the most common one I'm always hearing is, this is the longest cycle we've ever seen.
Sure.
That's really that's a positive in my opinion.
No, we're in a good place.
It's got everybody a little antsy, because it's longer, but it's still going. There's still deals out there. How do you feel about where we are in the market and the cycle? And are you optimistic? Are you neutral? Are you pessimistic? What do you think?
So I'm still positive. There's been what I see is such a market correction that needed to take place. The pendulum is going to swing this direction for quite a while, be it regulation or otherwise. A lot of caps put in place that really prohibited growth where necessary. With a lot of that regulation lifted, we're now floating back to an area where it's a little more free market, able to get out, businesses can grow. We're able to be more productive overall. So I think that's the long of it. Short of it is, we're going to be riding this for what I see as another few years.
And money's still cheap, right?
Money's cheap. We're getting some great rates right now, be it construction,
sure,
or even some of our refis on existing product.
Have you seen activity tick up a little bit with the recent decreases in rates that we've seen?
I have.
Yeah.
Nothing substantial because we're already in.
It was already low.
Our particular pocket, we're seeing a lot of action right now, anyway. But I think there was a slight uptick for sure. But we're already in such a strong space right now,
right?
Especially being Dallas-Fort Worth right now.
Money was already cheap.
Well, and everything's just firing on all cylinders. It's like I've never witnessed before.
Yeah, all asset classes are performing. Yeah,
that's right.
People are moving here still by the truckloads, plane loads, whatever load you want to call it. They're still coming.
Well, we're in our business. We're constantly trying to take a look at pull out the crystal ball where we can, take a look at the 3-year, 5-year, 10-year. And make sure that our investments, acquisitions are getting us in a good place, let's say.
Sure.
But really right now, I'll give you an example. In 08, 09, and 10,
yep.
When things took a turn,
sure,
we stayed strong. We were very well capitalized. We were able to acquire some of the projects that were going under.
Yeah.
So we were picking up some of our multifamily deals at what you would probably consider 65 cents on the dollar, given what's a regular market.
Right.
So we stayed strong. Our investors liked us, and we were able to keep moving through the hard times. So it didn't really affect us. Now, how it affects us now is while we're always have a side of our business that's on the defense, we don't have to push that quite as hard right now because of all the positive going on.
Right. Right. So back in that time where, like you said, properties were 65 cents on the dollar. I mean, everything was probably, if you had capital, could be potentially a good deal. Now you probably have to sift a little more through what you're looking at to find those diamonds or those deals that are out there, right?
Yeah, it is. It's a little bit harder, and we had even taken some time off on multifamily. So we had been focusing on our storage facilities, new development, and so on. And but now we're discovering some of those opportunities again.
Sure.
And so we're vetting deals, making sure that they work in our favor, and really our business approach as a whole is opportunistic. So we're kind of riding that out, cherry picking certain areas, and then finding opportunities within those areas that we've already got a full understanding of.
Right. Does Dallas-Fort Worth Metroplex really is different than a lot of the metros around the country, right? Mm-hmm. You got Dallas, you have Fort Worth, and then just all the municipalities that make up this MSA. So you have multiple markets in one. Mm-hmm. Does that attribute to our market being strong for real estate, where you have a lot of different areas that you can look at to find good deals?
Well, I think as a whole, just the area has a lot more to offer.
Right.
But Texas, for one, is amazing. Just you look at the types of business that Texas as a whole is involved in that take place in Texas, and it's so spread out, and that really provides so many opportunities. And then you get to, like we discussed, the deregulation or the lower taxes and so on, and the amount of companies that want to move here.
Right.
And that's really what's kind of helped go gangbusters for us.
And it's just all fuel for the strong economy that we're seeing.
That's right.
Well, that is awesome news, and it's great for all of us. We're all excited about it, but I want to get into what AMR Capital is doing and how y'all are working with your investors. So we're going to take a quick break, and then let's jump back into it and hear about all the exciting things y'all have going on in your house.
Sounds great.
This is the Working Title Show with Zach Sams, and we will be right back. And we are back. This is the Working Title Show with Zach Sams, and I have a great guest on. He's back, as I said, by popular demand. Rush Graves, the managing principal of AMR Capital. And I just realized I forgot to say hey to Trey in the booth. What's going on, Trey?
Hey, what's going on, Zach? It's okay. My feelings were hurt to start, but I got over it.
Well, we were just building up the anticipation for the intro to Trey is all it was. So
exactly.
You got it, man. Well, it's good. I'm good to see you, and glad you're here, man.
Good to be here, boss.
Absolutely. So, Rush, so let's jump into this. So, AMR Capital, tell me what y'all are doing at AMR. How are you participating in this real estate space?
Sure. So we're in a strong acquisition mode right now. We've got multiple opportunities on storage facilities right now, which are really about to come to a head. We're finishing our raise for those.
Okay.
So typically, once we've got all cash raised, all equity is in, then we're set, and we usually have our debt component in place. As we had discussed before, talking about some of the rates, we've got some great terms on construction loans right now.
Awesome.
So we're in good shape there. We've got a few multifamily sites that we're picking up right now that we're getting under contract and moving on, which I thought would be longer.
Sure.
And I was fast to hit the brakes anytime a seller brought any multifamily projects to us, just because there's so much cash being thrown at them.
Right.
You make an offer on a deal, and it's your offer along with another 30 or 40 or more.
Yeah.
And so that's
not an exciting position to be in, one of 40 offers.
Well, no, it's really not. And but what we're finding right now is again kind of our theme, which is more opportunistic. So we're seeing some deals where people have picked them up. Probably paid a little more than they should have to start with, but that's okay. They got in like everybody else, but they weren't able to make the properties fire like they were supposed to.
Sure.
So they found it more cumbersome for construction, because you're getting spread thin on some of your construction crews right now. So between construction, there's some great management teams out there. So management, they're faring okay, but it's really in who you know and who you can get to work the way you need it to for your business model. But we're finding bigger picture, some properties that are really not performing like everything that was promised to them when they saw all the pretty numbers in the pro forma. So after proper vetting, just really going through these things through and through, we've found a few properties that can work for us. And usually our model, we're anything 150 units and up.
Okay.
Usually about 350 is going to be our cap on unit count. Anything larger than that, and I find we're typically competing against ourselves in a lot of cases, and especially if you're going through a rehab, building it up. You find that before you've got the property, all rental rates raised the way you need to make the property perform, that you're even having to go back and start over on some of those other units, and depending on who the crowd was and turning units and so on.
Sure.
So we've got a few now that are lining up that, like I said, we're pretty excited about. So got them under contract. We're locked down.
Okay.
And so we feel good about them. So over the next few weeks, I'm sure you'll get to learn more about them, especially as we pick up the title company. And
absolutely, always appreciate
where
that.
you come in. That's right.
So you're going to raise money for these deals.
Correct.
Okay. So in raising capital on these opportunities, like who are you raising this money from? Mm-hmm. What do these people do?
So we deal with more high net worth investors. We've got everybody from Oh, it's really all walks, all shapes and form, but they are one thing in common: they're all accredited. So income meets the levels it needs to, or net worth meets the requirements that can be approved by council.
Sure.
And that's so they typically invest, and our usual investments are anywhere. Our LPs will contribute anywhere from $200,000 to $750,000 at a time.
Okay.
That's standard. Some like to go more, especially in some of the family office space. We've got some $2 to $5 million check writers. But it's making sure we have product to take down that much at one time, obviously. So going back to it, pretty wide range on who can invest. It's
Sure.
everything from like I said, the family office, high net worth, and we are getting a little more. We're kind of courting some different institutions, but that's a little further down the road. It's probably waiting until we get over the $150 million mark on our assets under management.
Interesting. That's exciting. So when somebody's investing with you, right? Let's say we write a check for $500,000, right? What's the plan of action that these investors can expect, when they're placing capital with you?
So first off, while we are registered with the SEC to manage blank check funds, if you will, we don't do that. We do everything a single project at a time.
Okay,
so
deal by deal.
They get a chance to see the deal, the full underwriting on the deal. Of course, we've got all the necessary staff in place under our roof that can handle anything from full evaluation, appraisers, etc. So it gives everybody a great idea, a full picture of the project and how it's going to work. We underwrite very conservatively. We will always underpromise and overproduce. So if you see something that shows that, maybe it's and we believe the cash on cash could be a 12% per year, that's probably because we saw that it can reach a much higher number within reason, within X amount of allotted time. So it's we typically do a 10 pref for all our investors. We believe strongly that if we can take care of the investors, harbor them and their money, then they'll take care of us for the long term. It's
Sure.
all customer relations.
Meaning
right?
they'll do more deals with you.
Correct. Our goal is to never give them a reason to want to leave.
Right.
Yeah, and it's been that way since 2006, since we got rolling. And the difference is now it's just more investors more often, so quality staff is there to help make sure that everything is hitting like it's supposed to all the time. Anyway, so that's the 10 pref is done on an accrual basis. Usually within the first 30, 60 days, the accrual process starts. And so with that 10% per year that the clock starts rolling. Mm-hmm. So that gives us a pretty strong reason to get the project rolling.
Right.
So, and that's true whether it's a existing project that we're acquiring and turning or new development project. So,
Right.
So either way, we're hitting the ground running. So all proper staff is in place, everything from engineering, management, or otherwise, ready to make a project take off.
So with your investors, how do you correspond with them? Are you corresponding with them monthly on what's going on with their investments, or is
Sure.
this how do y'all keep them abreast of their deals?
We have what I think is a wonderful platform. Mm-hmm. They can log in online at any time, because usually our old model up even through 2013 was the 15th of every month reports go out, they get emailed out and so on. It's you always want to keep the investor happy, keep everything in check as far as the numbers they can see and how often. But we found that if we had a solid platform that they could just log into at any time and view the numbers, the full ins and outs, every dollar in or out, then it was a little more comfort, because everything's done in live action.
Yeah.
As far as the accounting of each project goes. And so again, customer service play, log in at any time. And we even have an app where they can pull up an app on their phone. It shows under their name their overall account, the amount of deals that they're invested in with us, and then every dollar in or out. When was the payment? When did the wires go out? When was money invested? So on. So because today's investors smart,
Yeah.
they know what they're doing. And years ago I was so fired up and ready to get in and wanted to manage some big blank check fund and say, well, this is great. We can take $50 million and we can deploy it as necessary and bring, and keep it working in and out right. And while it's great and you get the staff in place, you can handle that. You find that today's investors so sophisticated, they know deals, right? They can But all too often, even some of my investors who like to put in, north of that $500,000 range, they'll say, I'm not going to invest in your fund. I don't want to be in a general fund. I got messed around by one back in the 90s or whatever it was. But the next single project that you find, the next multifamily deal you find, I'll put in X amount into that deal. And so you just adjust accordingly, right?
Is that more typical of the high net worth investor, that they really want the more tangible type investment? They know what the address is. They could drive by it if they wanted to.
They really do.
Yeah.
Yeah, and that's one of the reasons why we really try to only stay in Dallas-Fort Worth. A lot of our money comes from Dallas-Fort Worth. Our investors are here. We want something they can drive, tour, and be proud of it just the same way we are. Right. Everything we do is performance-based, whether it's how we're compensated or otherwise. We're going to be busting our hump to make sure it's productive. We're proud of it. We want them to be just as proud.
Sure.
And so that's something that we run with day in and day out.
That makes a lot of sense. Well, we're going to take one more quick break, and then we will be back with Rush Graves. This is the Working Title Show with Zach Sams. And we are back. This is the Working Title Show with Zach Sams. That sounded like a little country music there for a second, Trey. What was that?
I thought you would like that, on
that.
account of football season, the Cowboys coming back on TV, so, it kind of ties in.
Oh, the Cowboys. Yeah, let's not turn this into a sports show, but I'll tell you what, Charles upstairs, he's excited about the Cowboys this year, so I guess I'll be excited too. Are you a Cowboys fan, Rush?
A little bit, and I don't really watch a whole lot of NFL.
Yeah.
Kind of more.
I don't either.
College football.
Yeah.
SEC.
Yeah. That's good stuff right there.
That's a good way. That's quality ball.
Yeah, and plus, they're just playing football, not talking about all the other BS that they just can't keep their mouth shut anymore, I guess.
There can be some other diversions, yeah.
Yeah. I'm not interested in hearing about their other thoughts other than
what can of worms did I open up?
Exactly.
Trey, you messed up.
God, Trey, come on. We just went to a different format. Well, anyways, let's jump back on the original format. Back with us, Rush Graves, managing principal at AMR Capital. And Rush, we were talking about kind of what who your investors are, what they look like, what somebody could expect.
Sure.
Throughout, through the plan of through that plan of action when they place capital with you. But I'm sure that at some point somebody probably asked, how much am I going to make on this investment? Has anybody ever asked you that?
Sure.
Really?
Oh, it comes up quite a bit, and everybody wants kind of a.
They want to make money on these deals?
Well, they want. That's true. They, but and a lot of them will ask. I say, well, I'm not holding you to it, but how does it look? Well,
everybody wants a projection of some sort, right?
That's right. That's right. And crystal ball only works about 25% of the time. So
25% of the time it works every time.
That's right.
Yeah.
And so realistically. Kind of our inside track, we're not going to look at anything that we can't pull at least once stabilized at minimum of 12% per year cash on cash, and that's just kind of our inside baseball look. We don't guarantee that, and it's an investment like anything else.
Mm-hmm.
There really are no absolutes.
Sure.
But they can bet on who the operator is, the operating history, how successful we've been, and how we maintain that daily. And so some of these projects we get into, we've got one I'm thinking of right now that's up a little over 19% cash on cash per year.
Wow!
And that's seasoned with long-term debt in place. So it was a little bit of a management play. Did some nice renovation work, but really basic in the way of renovation. It's a multifamily deal.
Mm-hmm.
And it's just performing. It's firing on all cylinders. So. It was better than expected.
Sure.
Obviously,
which is what you want, right?
LPs are loving it. Things are good. So it really comes down to being able to locate that next opportunity. So, and we've got great staff they're out hitting the streets almost daily looking for these deals and so on.
So what are the thank you for that. So what are the key, are there a couple key components when you're looking at a deal that you're looking at that say, hey, this is where these are the moneymaker opportunities here, and what are those?
Sure. So you're more times than not, there's going to be a management play there.
Right.
You do run. There's some great management companies out there, and they do a beautiful job operating their properties.
There's nothing harder than management. I don't care what you're doing. Managing people, managing assets.
It is a soap
it's
opera.
hard.
It is a soap opera, and so I try to stay out of that as much as I can.
I don't
right?
blame you.
And, yeah. And so
hires.
Well,
you want to put the right people in place for management. It takes a special soul.
There's nothing that will make you lose hair faster than owning a management company. But you hire the right staff, get them in place. They can manage all the soap operas that everyone is constantly has unraveling.
Sure.
We are. As far as really putting a deal together, there's a lot of different things that come into play. You're always looking at location, and now what we're really seeing, and what you and I discussed earlier, the amount of companies moving to the area, right? So it's almost a captive audience situation where you can try to give the best and brightest property for that what could be that flood of employment coming to the area, and then we've got some other areas we work to where. Dilapidated properties where we have a chance to work with some of the housing entities. All right, we'll give them a solid basic property.
Right.
So quality of living is there. The difference is you're not looking at a bunch of granite countertops and all that. Everything is still basic, but we give them a clean, what I consider pretty place to live for what we'll call workforce and some housing entities.
Right. More on the affordable side.
Correct.
Right.
And we don't do a lot of LIHTC deals, which are the tax credit or rent income limited housing.
Is that because of regulation and red tape?
It is.
Yeah.
And then there's been multiple opportunities where we've gotten into them, and we do have some now, and those properties are performing. But it was because the opportunity was there, and we saw enough sky in the deal where we were able to capitalize on it. But ours is more what used to be called the Section 8 or housing voucher now.
Right.
A lot of our C properties deal with the different housing entities. Those have been good to us. Some of the first properties that I picked up in 2006 were primarily housing entities.
Okay.
And so we, 2010, started working with HUD VASH, which is a lot of your veterans. It's more supportive care for veterans that can't get work and so on.
And
money comes from vouchers.
And these housing entities, right, where there's, they're subsidized, I get, government way, correct? So is every unit being subsidized from the government, or is it just a portion of it, or is it a combination of both?
So it's for the individual. They inspect the unit. And if you get up to, sometimes you'll be 20 to 30% will be in housing. Those units get inspected, making sure they pass yearly inspections. And so the city has to deem the property, eligible or in such shape that they don't mind leasing to someone. But the people apply for it individually.
Okay, so
they bring us their voucher.
If you had a 100-unit complex, you're saying 20 to 30 of those would be subsidized by the government in some way, and the other ones are just regular apartments. People are paying the full boat themselves.
Correct. Okay. And that's not the main line of business for our multifamily, but that's still one of the opportunities that we'll go after. Like I said, when I got my start, the properties that I picked up really were just the worst of the worst.
Yeah.
And I was good with it, right? Because I wanted to be. I'd spent so much time, around the multifamily game through the brokerage firm I was with at the time, that I was dead set on getting into multifamily, and so was able to acquire management contracts beginning 2006 and then move on and so on. And it's gone very well, but it's been up from there. So
sure.
Stepping into C+, B properties and so on.
So when underwriting a deal potentially that might be a good fit, and I kind of asked this already, but does it trend more that it's a mismanagement issue that comes up, or is it more often now that somebody's just they're at their exit and now it's time to move on? What do you see more, or is it really, can you not pinpoint any one thing?
Sure. Well, it's always a big combination of things, and so there's never just 2 or 3 things that really stick out. It's always a big combination. You do find people who are just done with it. They're done with putting up with what it takes to run the property. Somebody else needs to come in that can take it to the next level. It's always customer service. Customer service is 95% of the time is part of the deal. And that's where bringing in solid staff that can really take care of the tenants comes into play. And that doesn't matter. That's everywhere from A+ to C- grade multifamily. So if you can handle getting proper management in place, that's a big deal. And then give them what they want, right? A lot of times it may have been somebody who was not willing to spend the money to create that atmosphere they were after. They wanted upgraded units. Didn't have to be Taj Mahal, but they wanted solid, clean places to live that didn't look like they had 8 coats of paint over the cabinets and so on.
Right.
Give them something they can be proud of also. But really, it's such a wide range of different factors that come into play. So
is the mismanagement more a mismanagement of their money or more of a mismanagement of their tenants?
I don't want to harp on it too much, because while that is a big deal, that's not the primary reason why we're after it.
Right.
But a lot of times the mismanagement of tenants.
Yeah.
If they're not taking care of tenants, they're not meeting
then
the
needs.
people
They're not releasing, so they're going elsewhere.
It becomes more expensive.
Yeah.
I want people to move in that want to stay there for the next 2 or 5 years, right? And they can handle the rent bumps every year, because if you're operating that property like you're supposed to, you're going to have fairly strong rent bumps in there, unless it was just a horrible property that you came in, did a major renovation on. Now we're talking about a big bump overall, and
that's all new tenants really at that
all
point.
New tenants. You're recreating your base.
Right.
Absolutely right. And we have acquired some of those situations as well.
How long does a typical tenant in an apartment that's living in apartments typically stay there? Is there an average, or is it?
So ours are a little bit longer.
Okay.
We're looking at really, we always get at least one lease renewal on most of our tenants.
Okay.
You get some that are in for a year, and that's fine, but majority are always well over a year, and at least 2 years on a fair amount of them.
That's good. All right, Rush. So if anybody listening wants to check you out, your company further, where can they go? How do they get a hold of you or one of your staff?
It's easy. It's just AMR.capital.
AMR.capital.
AMR.capital, and no .com, just AMR.capital. And got some great staff that's constantly out, whether searching properties or meeting with different investors. It's easy to get in touch with one of us.
Okay, perfect. They can find contact information there if they have any questions, correct?
That's right. And then that will also take them to the investment platform, which they'll have a chance to tour, see all the deals going on right now, and just get a feel for it, so that they get a great idea of who we are first, and then they can contact us. And they don't even need to reach out first. Just check out the website.
Awesome. Rush, great having you on again. Thank you for coming back.
It's good being here. I really appreciate it.
Absolutely. This has been the Working Title Show with Zach Sams, with awesome guest Rush Graves, managing principal at AMR Capital. Check them out at amr.capital. See you next time.